Can you retire off of just one single dividend ETF and put zero time into having managed your portfolio? The answer is yes, and I'm going to show you exactly how. Okay, I'm going to talk about a few things in this video. First, we're going to cover what this fund is and its process for finding investments. Then we're going to talk about its past performance. Then I'm going to run through a scenario to show you how I'm going to earn $50,000 in annual dividends and grow the portfolio to over $1 million off of SCHD alone. So first of all, two big things you need to know about the fund, right? It pays a dividend yield right now of 3.79%, and it has an adjusted expense ratio of 0.06%. These are very good expense ratios, especially when you look at the performance of this ETF. Okay, here's a quick summary. The Schwab U.S. Dividend ETF SCHD crafts a modified market cap weighted portfolio of disciplined dividend stocks with sound fundamentals. Okay, and then here's the last piece I'm going to read you about kind of the process of this fund that really helps protect it from risk and outperform over the long term. The index filters out stocks that fall short on liquidity requirements and have market caps smaller than 500 million. So it will not invest in stocks with a market cap under 500 million, or if they have not paid a dividend for at least 10 consecutive years. It ranks stocks that beat those two things, that meet their requirements. It ranks them by an indicated annual dividend yield and screens out those that rank in the bottom half. So this fund has a process that keeps it protected from too much risk, and then it has a ranking process to only invest in what it believes, based on dividend yield and quality factors, are the best dividend growth opportunities that meet their requirements. All right, let's get to what stocks are actually in this ETF, because ETFs are made up of slices of individual stocks, okay? So here you go. We're just going to cover the top 10 companies in this ETF, and then I'm going to get to these income and dividend forecast scenarios. So Merck is 4.3% of the portfolio. Texas Instruments is the next biggest. Home Depot, Amgen, PepsiCo, IBM, Pfizer, Broadcom, Verizon, and Cisco Systems. In total, the fund owns about 99 companies, and 40% of the assets are in the top 10 holdings. All right, let's get to returns, and we're gonna get to performance, and this is where things are pretty crazy. We're looking at total return here, so this incorporates dividend plus the appreciation of the shares. So over the past year, SCHD is down about 9% versus the S&P 500 down about 16%. Over 3 years, SCHD is up 38%, 5 years it's up 65%, and 10 years it's up 211%, beating the S&P 500 in all of those categories, which is pretty crazy because it's less volatile and goes down less generally in downturns, which we can see right now. It's only down 9%, whereas the S&P is down 16%. All right, what I've done is I've built a little calculator here, making a balance of $100,000, which I share my portfolio over time. I've got about a $100,000 portfolio right now. Right now, the annual income from that would be $3,667 because of that 3.67% dividend yield. But we can see over the last 5 years, this has its dividend growth at 13%. This year it was at 10%. Last 5 years says 13. In the last 10 years, it says it's at 11.8%. So now we're gonna move to this income forecast, which is just crazy. The numbers this is using is a base dividend growth rate of 10% per year. It has grown at 13% per year historically, but we're going to use 10% to be more conservative. We are reinvesting the dividends in this scenario. I'm in my early 30s. I'm building a scenario to invest for 20 years, adding $1,000 a month, so that's $12,000 per year, and that's how in 2042, with 10% dividend growth rate and $1,000 invested every month, plus reinvesting the dividends, this will pay me $50,000 a year in dividends alone. If the dividend growth rate maintained at 13%, we would actually get paid $78,000 per year in dividends alone. Now that's not the only thing though. It's not just your dividends. This is just showing dividend income. The other thing that's happening as the ETF grows, we saw that stat, it returned 15% per year. If we go to here, we also have to factor in the return of the actual fund. And so what I'm doing in this scenario is we are starting with $100,000. That's what we have today. We have 20 years to save, and we have a growth rate. This is the fund's performance would be 8% per year. By 2042, our portfolio value, if we just owned SCHD and it returned 8% per year and we put in $1,000 every month, would be over $1 million. Now, if we wanted to be a little bit more aggressive, maybe we think it's going to do better, say it does 10%. $1.4 million after 20 years, right? Now, let's go back down to 8%. After 20 years, I'm only going to be in my early 50s. Maybe I'm going to be totally capable and wanting to work another 10 years. If you add another 10 years at 8% per year and you're adding $1,000 a month, the portfolio value is going to be $2.42 million after 30 years. Now we're going to jump back over and I'm going to show you what your annual dividend income would be with this at $2.4 million. Okay, this is just insane. And again, now I have made the portfolio how large it would be after 30 years when I'm ready to retire and not add any more money, right? So $2.4 million, that would give us 35,500 shares of SCHD. We go to income forecast, and this is with 10% dividend growth per year. We would get paid $87,900 in dividends this year. Now, I've gone to no annual contributions and turned dividend reinvestment off because we would then be taking these dividends, not reinvesting them. But the fund would still grow, the performance of the SCHD itself would still grow, and the dividend growth rate would actually help you continue to increase your dividends every year. And if you were just taking the dividends and spending them and not having to draw from the portfolio, this actually shows that your dividend income would continue to increase. So if we wanted to go another 10 years, and at this point I would be in my early 70s, then the dividend income would be $228,000 a year. And we start to look at these numbers and they just get bonkers, right? But what this does is this shows the ability to retire off of a single fund that has proven performance. It's not high risk. It's managed by other people. It has a low expense ratio. You would literally have to spend zero time managing your portfolio. You could spend the rest of your time with your family, your loved ones, earning skills, getting a better job, working your job, living your life, and not even have to think about all these individual stocks that I always talk about. And you can create generational wealth, especially if you leave something like this for family members and you let it go for 30, 40, 50 years. Now, the reality is at some point we're going to need some of this money, but still, you see what this scenario can do. Let me know what you think about retiring off of just SCHD, and if there's another fund you want me to run one of these scenarios with.